Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Hello, listeners. This is your host, Andy Curry. Welcome to the program today. People, I am excited because I have on the line with me Joel Block, who has been speaking professionally for 12 years, and his content extremely unique and fascinating to me, which is on capital formation and crowdfunding. Joel speaks primarily in the U.S. He is based out of California, and he is working on a book called Investment Crowdfunding for Dummies. That's in the Dummy series. So, Joel, welcome to the program.
Hey, thanks very much for having me.
We are fired up to have you here, Joel. Thank you for joining us. Let's talk about your speaking business. You know, it's in capital formation and crowdfunding. So who are you talking to and how are you helping people?
Well, because the whole investment crowdfunding business is new and really it's not well known, there's been a tremendous amount of demand by industry people, Wall Street people, to understand how this all works. So venture capitalists want to understand it. Investment bankers on Wall Street want to understand it. The wirehouses on Wall Street want to understand it. And as that whole group kind of catches on, then consumers want to start understanding it. So there's more and more demand for consumers to understand it. So that's one audience, the crowdfunding business. It's a huge development in the United States. It's the biggest change in the securities laws in 80 years, which affects the way that all private money gets raised, all money for small venture capital companies, most money for real estate, for a lot of that money. And so investment crowdfunding is just a tremendous new development in our industry.
Yeah, you hear a lot about crowdfunding. I remember the first time I heard about it, I think was a year ago, roughly. And it was, to me, it was new at the time. I'm like, what is that? So that is an exciting thing. And before the interview started, you and I talked about how it was brought into law to make it a lot easier to do this. Can you talk about that for a minute?
Well, in 2007 and 8, when the economy collapsed in the United States, it was almost impossible for small businesses to get any capital. It was very difficult.
It was.
And very difficult. And banks weren't lending. And so the way that small companies typically get capital is they go to their friends and family and they raise money using what's called a private placement, which is the sale of securities, like sale of stock in their company, but not on the stock market, through private means. So those rules are very strict, and you're not allowed to advertise. Private placements have to be kept private. And what would happen is that somebody would try to raise some money, and they would go to their 10 friends and family, and then they'd run out of leads. That's what happens to everybody. You always run out of leads. And they weren't allowed to, go in a restaurant, go in their church or their temple and say, hey, everybody, I'm doing this thing. Everybody want to be involved in my company. And that was illegal. In fact, if you did that, it would contaminate your offering, and then you would lose your exemption. To be private, you'd have to register with the government, which is what you don't want to do. So the government said, you know what, we need to make it a little easier for companies for a couple of reasons. One is because we just want to make it easier for them to raise money. But secondly, the internet is making it impossible to keep these private placements private. Nobody can keep this stuff private anymore, because let's say that I told you about my deal, you liked it, you gave it to a friend, your friend put it on Facebook, now the whole world knows about it, and through no fault of my own, my deal is now contaminated. So all the way around, the government recognized correctly that, number one, we have to make it easier for entrepreneurs to find leads. Number two, we need to, make sure that their offerings aren't being contaminated through no fault of their own. And additionally, investors are kind of tired of, getting really cruddy returns at some of the big brokerage houses.
Right.
And so this is an opportunity for them to find, deal promoters, guys like me and other people that are putting deals out there. So it's not only a way for guys like me who are sponsors of transactions to find investors, but it's a great way now for investors to find sponsors that they want to align themselves with. And that might be the greatest thing of all, is that people now are able to find opportunities to invest some of their capital, not all of their capital, but some of their capital into group real estate investments, which really has never been possible before. So it's a brand new world.
I would think, when the banks tightened up and weren't loaning, and then this popped out, that's going to really backfire on banks and other places who loan, wouldn't you say?
Well, you would think so, but the truth is that the banks make a great amount of their lending money on larger transactions, and at least for now, most of these transactions are smaller transactions. And the way it works, the way that the venture capital business works, and I was in venture capital for 20 years, and I've been in real estate syndication for the balance of all that time. The way that these transactions work is that small companies get things going. We take business and market share away from larger companies, and then the larger companies come back and they buy us. And that's the way that it works. So the banks don't really want to deal with the sector that that we're attracting anyway. For the most part, the brokerage firms aren't really concerned that we're buying real estate. They're still getting their big mutual fund and their stock business. But as money starts moving away from the stock market, then they're anticipating that over time this could be $1 trillion market, which makes them very nervous. $1 trillion is an awful lot of commission that they're not going to get their hands on.
Yeah, it is.
When that happens, then they're going to come out to the companies who are crowdfunding, and those companies are called funding platforms, and we're all building funding platforms. As that starts to happen, then the big warehouses are going to come look for companies to buy so that they can take their market share back. And then what they're going to end up with is they're going to end up with pools of sponsors and whole new investment opportunities that they can put out to their entire community. So it's a very, very big opportunity. It's a sea change the way things are being done. It's something that is very little known. Hardly anybody knows about it yet, which is why for your listeners, this is a very exciting thing, is that they really are just not being exposed to what the inside. They might have heard of crowdfunding, but more than likely what they heard of was one of the other two kinds, which is either a GoFundMe, which is, you have somebody dies and you don't have enough money for a funeral, so you put up some money and, you just get some donations. People are very generous in that way. Or secondly, Kickstarter type of things, or Indiegogo, which is, I want to make a film about dogs. You go find everybody that likes dogs. They give you $20. You go make the movie about dogs, and then you send them a copy. So what you're doing is actually called a pre-sale. It's not legally a pre-sale, but you're basically selling something before you made it. You collect the money, you make the thing, and then you sell it to them. It's called donation or reward. And by collecting it as a donation, you sidestep a lot of the commerce laws in the United States. So it's working well. They're doing $5 billion a year in this financial. I understand the numbers aren't for Kickstarter. Maybe they're more by now. So it's a good business. A lot of entrepreneurs are able to get a lot of projects done that they could never have gotten done before, especially projects that are smaller, because the cost of putting together a private placement, the legal costs are very big, and it would be impossible to do a project for $50,000 or $100,000 because it costs too much money to raise the money. So now people can get all these pre-sales and they can produce products. But the investment crowdfunding business is different. It's still governed by the same securities laws, because investors are giving you the money with the expectation of giving their money back plus more.
Right.
And that makes it an investment. When you do an investment, then all of a sudden now you're in a whole different world that's regulated by the Securities and Exchange Commission, which now has new rules that are softer and easier for entrepreneurs to operate in those rules, and it's easier for investors to find opportunities from guys like me.
When you're talking about the crowdfunding one, about the dog example, give me $20, and when I get the video made, I'll give you a copy of it. What kind of rules in that, for instance, happens? Like, if I was going to do that hypothetically, and if I didn't make the movie finally, is that an illegal transaction? How does that work?
Well, number one, I'm not a lawyer, but there was recently a case where somebody, kind of defrauded people and said, I'm making, I'm going to make this product, give me a whole bunch of money, collect the money, and ran away. That's illegal.
Right.
For sure. And I think that the FCC or somebody went after them, or FTC maybe, somebody went after them. But if you collect the money and you legitimately try your hardest to make the thing and it doesn't work out, then I guess it doesn't work out as long as you didn't do anything on purpose. I don't think there's a problem. But that's exactly the reason why we have these rules about no pre-sales. For example, when you go to Amazon and you buy a book and the book is out of stock, you give them your credit card, but they don't charge your credit card today. They charge the credit card the day it ships, because consumers are not supposed to take risk. Consumers, it's supposed to be a relatively riskless transaction. So in other words, I want a book. You have a book. I give you the money. You give me the book. Now we're even, right?
Mm-hmm.
It's pretty simple.
Right.
But in a situation where you say, okay, you give me the money. The book isn't made yet. When I make the book, I'll send it to you. And if I can't make the book, then, unfortunately, I burned up all the money trying to make the book, and we all lose. That's sort of, that's the reason why we have commerce laws that say no pre-sales. But it's not being called a pre-sale. It's called a donation, and I'll give you a reward if I'm successful.
Right.
So if I give you the donation and I'm not successful and I didn't do anything on purpose, I guess that's just how it goes.
Fascinating. Now, what is the most interesting thing you've seen with crowdfunding?
Well, some of these deals are, I'm talking like on Kickstarter. Some of these deals have amassed tens of millions of dollars. I mean, they have generated tens of millions of dollars. There was this cooler. It's called the Coolest Cooler. This is an amazing thing. It might be one of the biggest campaigns that was ever done. Some guy likes to go tailgating at football games and everything, and so he creates this cooler that has a USB port, it has a battery pack, it's got a hookup for a blender, and it's got all the supplies inside, so it's like an all-in-one unit. I mean, and then people bought $12 or $13 million worth of units at a couple $100 a piece. So without any initial capital, the guy got all this money to build all these units, and he basically got all the capital for free out of thin air. And that's an amazing thing. Ordinarily, he'd have to raise the money, take in partners, give away a piece of his company, then go out and sell. And what's really smart about at least the Kickstarter model, and investment crowdfunding is different, but let's say you sold 10,000 units. Let's say it wasn't a $13 million thing, but let's say you sold 10,000 units at $10. Let's just say, and you made $100,000 of sales. And then you wanted to go out and raise money through investment crowdfunding or through any kind of crowdfunding. What's amazing about this is that you then now can say, hey, I've already got 10,000 customers. How many companies can say they've got 10,000 customers? How many companies can say they've already done testing with the marketplace, and they've already gotten a lot of legitimate feedback, and they already know a lot? That's an amazing thing. Number one,
it is
the amount of feedback that you can get. You can parlay. Here's the second amazing thing: is that there are books that are called Raving Fans and How to Get Your Customers to Be Your Fans. And fans are kind of the highest level of participants in a company. But crowdfunding, especially investment crowdfunding, there is one higher level than fan, and that level is called shareholder. And so when you take somebody in a crowdfunding environment to be part of your company, and that person now is a shareholder, I would imagine that if you sent out a link and you said, go on Facebook, go on Twitter, go on LinkedIn, post this everywhere you can, and tell everybody in the world about it, because our team together needs to make something happen, you have the commitment of people who are not only fans, but that have a financial interest in your success. And that, in the United States, is really the highest level of participation at any level. So it just all the way around, this is pretty amazing.
That's extraordinary. I never even looked at it like that. That's exciting. I hope listeners listen to this, really think about that. Now, to take this a step further, you're working on a book called Investment Crowdfunding for Dummies, which includes a lot of this information you're speaking about now, doesn't it?
Yes, it does. And, it's designed for the 300 million Americans and people outside the United States who are going to choose to invest in these transactions. What do you need to look for? What do you need to understand? Because these transactions are not simple. And, we're trying to make them simple. Listen, we're building a funding platform. We're going to offer a lot of opportunities to investors, and they can all participate. But in my opinion, I've been in the hedge fund business, the venture capital business for almost 30 years. To me, an educated investor is a good investor. So we want to educate people. That's what the purpose of the book is. I want the investors to be thoroughly well-read and thoroughly understand what they're doing. Because I don't want anybody to say, well, gee, I really didn't understand what I was doing. I kind of went along with the program. This is not exactly like going to the store and buying a pack of bubble gum. I mean, this is quite a bit more complicated, and people need to really know what they're getting involved in. The returns can be enormously better than 2% that they get, at some of their financial institutions. But at the same time, they need to understand that there are some risks, and there are some rules that they need to abide by, and they need to understand what those rules are. And that's what the purpose of the book is to help people understand exactly how the game plays, exactly how they get paid, exactly how the deal promoter gets paid, and how the game works, because it's got a whole different set of rules than they're used to, and it's a little different than buying corporate stock too. So they really do need to understand it. That's my goal.
Fantastic. Now, when do you expect that to be out?
Target date is mid 2016. So probably 8 or 10 months from now.
Okay. Now, Joel, I'm sure the listeners are going, wow, I need to know more. So to get a hold of you, to hear you speak, to learn more, how can I do that?
Well, first, I just want to, if you don't mind, mention that our crowdfunding platform is going to be called, actually not going to be called, it is called, we're already rolling now. It's Investor Valet, so investorvalet.com. And we're going to be servicing investors, matching them with deal promoters. Everybody who's in my network is a deal promoter and a sponsor. And we're bringing a giant network of guys to bring deals to the table, and investors can pick from those. And then, by the way, institutional investors are going to be investing alongside. So there's going to be all different kinds of money involved in these deals, and that's exciting. That's number one. If somebody would like to contact me personally, they can email me at Bullseye, BULLSEYE, cap as in capital, CAP, at gmail.com.
bullseyecap@gmail.com.
Yep.
Okay. Well, Joe, thank you so much for sharing this information. That was fascinating. Never in my life heard something like what you're talking about. That's exciting stuff.
Yeah. Well, listen, this is the biggest change in the securities world in 80 years, and let me tell you, hardly anybody knows about it. So, listen, we want to get the word out. There's about 100 of us that are really working hard to make it happen, and slowly the world is starting to understand it. And I can promise you one thing, that 5 years from now, it's not going to be called crowdfunding. It's just going to be called funding, because this is how everything is going to be done. So, be on the lookout. That's my prediction, but I'm pretty sure that that'll be true.
Exciting times.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.